This is the dollar yen on the 15, and this is a wedge pattern that I've just got in. It is Sunday, 10:15 in the evening, so pretty much got involved in this trade on the open. If my requirements were met, I was going to do this, and my requirements were met. The chart looks bit of a mess, so what I'm going to do is I don't want to delete that information off, but I will bring over another chart and talk through this on a clean chart. So dollar yen, let's go out to the daily time frame. Actually paid 6 pips to get involved in this. Hate paying high fees, but the trade merits it. It's very, very valid for me in many ways. So here on the dollar yen, typically guys, what we see is with this big old rejection candle, we do start to see the market making our way higher. Now this for me could be a flag pattern, and it's going to look, yeah, it's going to look something like that. So this could be a flag with a touch, and guess what? We've not had the confirmation touch. We've had a nice bearish run. So this is setting up to be a form, or at least a flag pattern, and that means if it is a flag pattern, that we are going to see a move higher. From a structural point of view, we have not put in an initial structure high above this level. So that's the first thing I'm looking at. So no structure confirmation, but what we do have is we have our low and a higher low, and we are currently making our way up. If I zoom in, read the candlestick formations, this candle right here is it's a hammer, but it's closed in the top 15% with no body. So that means price came all the way down and got sucked all the way back up to its original opening price, and so the bulls were firmly in control, and the bears, while they tried to push down, couldn't push back. So that's a sign here that there is buying pressure. Look at the following candles as well. There is not a lower low, lower close, but look at these candles. There is a higher high, higher close, higher high, higher close, an indecision candle, but it does show clear bullish momentum, and the candles after do not show any sign of bearish movement. So trading is not just about reading structure, it's about reading the candlesticks. The candlesticks tell a story, and if you know how to read them, particularly if you read them when you're at structure, and again I'm just going to highlight the wicks here. Look at what we did at the highs of this structure. Instead of putting rejection candles, bearish rejection candles, we were putting in bullish rejection candles. We put in a higher high, higher close in it, and then this rejection candle. So just an indication here. These are it's like a jigsaw puzzle. It's putting it all together, and the more you put together and the more confirmation you have, then the probability of your trade going to its destination has increased, because you have a higher probability of knowing the direction. So that's on the daily. Let's go to the 240. Okay, so here on the 240, this is a little bit of a mess, to be honest with you. I've been watching this for a few days and I've just stayed away from it. Wasn't anything I was interested in. There was one thing though that did stand out to me, and those of you that follow me, whenever I see directional moves like this, particularly on the higher time frame, then I'm always looking for some sort of a breakout pattern. Usually it turns out to be a wedge or a triangle, which is the most popular other than flags. Now what concerned me though is if I put a structure level on just here, this high, we have not violated it. Okay, so if we zoom in, because of this big wick here, the following highs have meant that technically we don't have a break above, close above, and therefore for me we do not have an initial structure high. Now this is where a little bit of judgment comes into play, because this is always an area of discussion with traders. Is technically it's not a break above, close above, even though we have these candles here, and that's because of the wick. But you can also flip it around. I mean, first of all, my rules are this is not an initial structure high. I do need a break above, close above for that to be confirmed as an initial structure high, and if we had that, this trade would carry significantly more weight, but we don't. But I do have additional confirmation, which I'll come to in a minute. So the thing that we need to look at is then, let's take a look at what price has done, and this will really bring things into focus. Okay, since we had this very large rejection candle, look at what price has done. We made a new high, a pullback. We made a new high, and this high was tested 3 times. We saw a pullback. We came up again for another high. Now, if an area has been tested 3 times, got an initial rejection but did not violate the outside return and has come up again for another test, not just once, but if we zoom in, you can see here numerous tests hugging that line. We saw a shallow pullback, and then we're back up again testing that level. Okay, there is a clear battle going on here. This line, this 110 psychological number is holding, but look at what we're doing. We are making a higher low, making a higher low, making a higher low. An indication here that no matter that we've knocked on this door so many times, eventually it's going to open and we could break through it. So again, this is all about reading structure, reading the candlesticks, and it comes down to maybe a little bit of intuition, but intuition to me is only comes when you have thousands of hours in the market, and I have 67,000 hours of chart time. I used to just sit here and watch the candles form, and I know things like during the last 2 minutes the hourly candle or the 4-hourly candle can get sucked all the way back, or can suddenly just rally after doing virtually nothing for the whole cycle of its life, the hourly candle or the 240. And it's amazing, the battle happens right at the end, and these are just things that you pick up on. And then you pick up on things like I've just discussed, like it's tested 3 times, like we're making higher highs, we're testing again for a 4th time, we're testing again for a 5th time. Eventually knocking on that door, it's going to open and we're going to go through it. Now just to clarify this, I don't know that that's going to happen, but I've traded enough of these setups to know that I have a higher than a 50% probability that that's going to happen. Now there is something else as well. We want to break down these charts as much as possible, because I don't have that initial structure high. I need more confirmation. Let's look at the last outside return up here, and I'm just going to, I tell you what I'm just going to do, I'm only going to highlight the wicks, just the wicks, nothing else. Let's zoom in so I can show you this so it is correct. There aren't many wicks here, but you can see. I'll just fatten this up a little bit. This is the outside return here, so this is what we pay attention to. So we do need that to go a little higher, and it goes from the lowest close of the candle to the lowest wick. Go up a bit more, come on. Okay, come down, go up. Why are you not working? It's too small. Let's do that again, okay. It's important we get this right, and I'll tell you why. Okay, let me zoom out. I'm going to, those wicks are the previous outside return, and I want to show why this is, oh my God, why this is incredibly important. Are you going to let me? You're not, are you? You're just not going to let me. Okay, here we go, here we go. There we go. Now, what do you notice? What has not yet happened? There is a huge gap between that outside return and this being touched. In actual fact, it's there because our highest point is that wick, and so that means that the outside return has not yet been tested, and more often than not we will see price go into the wicks as a minimum and test it. Since we've not yet done that, that's an indication in itself that we've not done it. Now, it doesn't happen all the time, and I don't have the exact figure of how often it happens, but trust me when I say, based on my experience, more often than not we come up to retest the outside return, and we have not. In fact, we have not by an amount of 11 pips. Okay, 11 pips is enough. It's not 2. You know, it's not close enough. It's 11 pips. It's a good old distance away. That in itself, when we look again, and I'm sorry if I'm rambling on a little bit here, but this is very important. You know, we are making higher lows. We are testing that psychological number, and it's the psychological number that's holding this. And then we're waiting for a pop through to retest this outside return here, which has not happened. So I spent a lot of time talking through that. The next thing we need to look at is we know that we have a very nice pole. Okay, we could be looking at a wedge pattern setting up here. Triangle, sorry. So test, 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 and then multiple tests here, expecting a minimum of a pop to the upside here, maybe even a retracement, and then the breakout. Okay, but I want to get in this early when price is telling me that I have an entry and I can get in at a great price. Even if it only comes up to this level before retracing, well, my stop is still in the best place and I've still got a great price. So this may be one that we need to hold. Okay, so what other confirmation do we have? This entire area here where we have all these arrows really interests me. Look at all these wicks, look at them all. So we have this one, which is a hammer, and we've closed in the top 25%. This one failed to make a new high. This one is an indecision candle. This one is a tombstone doji. Actually, tombstone dojis are actually when they close at the bottom, but this is a doji, clear sign of indication it opened and closed at the same point. Now this one, this is the candle to pay attention to. This candle made a higher high, higher close. There was not another candle here or here or here or here that made a higher high, higher close, and really importantly, there was not a single candle that made a lower low, lower close. Okay, so this candle right here is additional confirmation. So let's take it down a level. Let's dissect this thing piece by piece. And in fact, I've missed out a very important piece of information. No, okay, that important piece of information is on the 60. Okay, so I'm going to stick with this. Look at the nice move, the nice pullback, the nice move, the nice pullback, the nice move, and are we getting the pullback? Now, do we have significantly more wicks to the downside than we do to the upside? And the answer simply is yes. That as well is more confirmation there is more buying pressure, or at least there's buying pressure at this level, because every time the bears try to push down, the bulls are pushing back harder and giving us big wicks to the downside, an indication there's more buying pressure than selling pressure. Now, I did talk about this being a triangle. I don't think it is. Based on the 60, I think this is a wedge pattern. Now, not to get confused, I trade these patterns an awful lot. Wedges and triangles are extremely similar, and you don't know which one it's going to be until it forms. But there are indications that we can use to determine them. I won't really go into them now because they can be quite complicated. But if I do this, all of a sudden our triangle has turned into a wedge pattern, and that means that we have a touch at the top. Let me bring this down and fatten it up a little. We have a touch at the top, we have our confirmed touch at the bottom, we have another 2 touches at the top, and then we know that we've got these multiple touches here. Now, for a wedge to be valid for me, I need one thing to happen, and that is this is the close of the candles of the first touch, and as long as the second touch, which is this one, does not touch the closes of the candles on the first touch, we are wedging. I don't like that word, but we are wedging. It means that price is getting narrower and narrower and is fighting to get up to that level, but cannot get enough pressure to retest. A clear sign that we're wedging. We also have the exact same thing on this side. So here is the body closes right here. Don't know if you can see that. Just let me change it, make it a different color. And apologies guys if this video is rambling on a little bit, but I think it's important that I teach people how I trade this. It's entirely up to you if you trade this style. I have found a very, very profitable strategy and way of trading these, and it is very profitable for me, and if I can pass that information on, I will do. Right, there's the closes. Look what has happened here. We have failed to retest those lows, not by much, but we have rules in trading. If it's 1 pip out, it's 1 pip out. It did not touch, so a clear sign that we're wedging on either side here. So could still turn into a triangle, but it doesn't really matter, because guess what, on a triangle we get our entry at the bottom, on a wedge we get our entry in the bottom. The only difference is the top valid or not, but it makes no difference. The pattern, the entries, the stops and the targets are all the same, so doesn't make a difference. Right, so we know then that we're holding this level. We've had 3 tests now, and one other thing to look at, and I think this is the last thing, is that this is how low the spikes came on the first test, this is how low they came on the second test, and the third test actually came a little higher as well. So we are seeing the lows getting higher and higher, an indication again that there is more bullish pressure than selling pressure. So okay, let's get down to the actual trade itself. Now I have convinced myself that this is a valid wedge pattern. What's my entry? Well, quite frankly, we have an awesome structure level here to get stops behind. So that's exactly what I want to do. I don't want to wait for a higher close. The reason for that is because on the 240 I've already shown you we've had a higher high, higher close, and I've shown you that we have not had a lower low, lower close on the 240, so that's going in our favour. Let's go ahead here then and bring back on the orders. So this is a phenomenal structure level here. As mentioned, what I want to do is give this a little bit of breathing room. This is the very low here, and I've actually gone just 6 pips below it, okay, because we could see a large spike and then get sucked all the way back up. People refer to this as stop hunting. I'm not au fait with that, because I always put my stop, at least I try to put my stop in the most appropriate place, and that is behind structure. And if you put stops behind structure in an appropriate place, then you stand less of a chance. And really all I'm worried about is a big spike coming down. If we were to rally down like this, the chances are that that candle is going to continue, and I'm going to be wrong with the trade. So an appropriate place here just underneath the very first test, considering we've got 3 levels of structure here that would need to be violated. So right, in terms of the trade then, well, I only play for a 127 fib on these types of trades, so I'm just going to go and throw a fib on from the very first test all the way down to the start of the pole. Start of the pole for me is where the rally starts, and that is right down at the bottom. So just let me spend a second removing all the fibs that we do not need, so we can keep the chart as clean as possible, because it's important we see price. And that now means that we have something resembling a risk and a reward. So we have a risk of this much. Now the average risk for me is 30 pips on a trade, and I'm very happy with that. I don't like 50, 60, 70 or anything more than that in terms of risk. I will take them, but it doesn't mean I like them. Now I am front running from that 127. I'm front running by 3 pips. This is the dollar yen, so it doesn't have a huge spread, so 3 pips is plenty there to get me out of this trade. We're going to make that green for profit. So what is the risk? Isn't quite as good as I wanted, but 34 pips of risk, so just a little bit over my average, and my reward is 74. So we're looking over a 2-to-1 risk to reward here. High probability trade based on everything I've talked through. So could agree 22 minutes long I've been talking. Right, let's go ahead here and bring over the original trade. There's virtually no difference. I'd already drawn it out exactly the same way. So we're in the trade. There is nothing else to do. However, I am prepared for the following: for this to happen, for the back pattern to kick in, see a retracement maybe down to a retest here. Typically this type of pattern we do see 3 tests either side, then that's when we get the breakout. So I'm in it. I may be in it for a while. There's nothing else to talk about until we get the breakout. We're back. It is 7:10 in the morning. I am on my first cup of coffee and I've come to check my charts, and I've said this before, I love it when I wake up and the trade has won. It takes out a lot of pain if it hits overnight, because I don't wake up to it either in arrears or near targets or halfway to targets. Nope, it's just hit. What a beautiful trade for 74 pips. Needed that. I've taken a bit of a hammering, to be honest with you. I don't tend to take a great deal. This sounds really big-headed and it's not meant to be. When I take losses, typically my losses are quite small and I don't tend to have a lot of them together. I may have a loss and a loss, and then a win and a win, a loss and a win. But I took 3 losses in a row. quite big ones as well, all around 50 pips. So took quite a hammering, and this has really helped this 74 pipper. Just to recap over this, in hindsight now, looking at it, you can see, wow, this was a fantastic area to get long. I'd already run through the rules of why it was valid for the first test here and the second test and the second test here. And I was actually talking to a fellow trader, and I sent him a message, and I think it's worth noting on here that just because you miss the optimal entry, which is pretty much what I got here on the trade, doesn't mean you can't follow the trade to its target, because wedge patterns, triangles, flag patterns, they're all breakout patterns, and typically with a breakout pattern, what it is it's relief before the continuation. So if you look at this here, look at the momentum, the steepness of these candles here. It was a big bullish run. Then what happens is you get a bit of a rest, you get relief before that same momentum carries on. And look at the steepness of the pole. And so what happens is, for me, my best trades are whenever we get this type of movement, this type of momentum, and it becomes very, very directional. And with directional trading, two things happen. One, it typically is in trend, so you have the option of jumping on the trend anywhere within this rally. Two, within these types of rallies, you get more breakout patterns on the lower time frame. You get high and tight flags, you get normal flags, you get wedges, triangles, things like that. And let me just drop to the 5 minute. This didn't come off, but it almost did. I emailed a fellow trader because he'd missed his entry. He's in America and doesn't get up the same time as I do here in the UK. And I said, you know, follow this movement, because look at what we did. We had a new high, outside return, new high, outside return, new high. And I actually said to him, can I fatten this up? I said, Cody, watch out here. Looks like we've got a high and tight flag. Just like this. Now what actually happened is, because it's the 5 minute, and structure on the 5 minute isn't as strong as the hourly, and you do sometimes get these breakouts. But look here, directional pole, test, 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 test. If you'd had your stop, and an ATR is just 2 pips, you know, you would want your stop here, just to give it some breathing room, and then play for that 127. And look what happened. You know, we had a pullback, a new structure high, a pullback, a new structure high, and there we go. You know, we were in trend. We did have a high and tight flag. If you use proper stop placement, even though we did violate structure here, you would have been able to get involved. So it's just a little tip. If you miss the move, but it is going in the right direction, particularly with momentum like this, then drop to your lower time frames, and go back and back test it. I'll tell you, you'll see flags, triangles, wedges, trends. Anyway, 74 pips, lovely wedge pattern.